Hello guys, it's Max here from Daily Market Movements. Today it is the 27th of October 2021. It's Wednesday, which means we are halfway through this week's trading week. On Sunday, I actually posted a video where I shared with you my opinion as to where I believe the market will be heading this week. And then, of course, just like every other Wednesday, I post a video midweek just so that we can analyze where the markets have moved over the past couple of days and where I believe they will be heading as we go into the end of the week. And then on Friday, I will post that video where I conclude this week's market movements. So let's start today's video with the gold markets. We have the gold over the US dollar in front of us. We've had a very interesting week so far here in the gold markets. And why? Well, look what happened. We had that daily close above the 200-day EMA. Now, if you watch my video on Sunday evening, you'll know how important I said that a daily close above the 200-day would be here for the gold markets. I said if we got that daily close above the 200-day EMA, that would likely send us to that 1830 area, which is the next fib level. And what actually happened on Sunday night, Monday, is that we actually got a false breakout here. So as you can see, we got that daily close above the 200-day EMA. That was something that I was looking for. I was very bullish on gold. But then what happened the next day? We had a massive turnaround here. And most safe havens, the crypto markets also fell. We had Bitcoin fall rather significantly. We've had the likes of silver fall. We've had gold fall. So I think it's been a broad pullback here in some of these safe haven markets, and now we currently find ourselves trading down at 1785. So what does that mean for the gold markets? Well, I think that personally we may be heading down towards the 50-day EMA, which is down at 1778, but we could easily just snap back and go and bounce back above the 200-day EMA. Nevertheless, I really like gold here. Why? Well, we still have the 50-day EMA, which offers plenty of support just below us, and then below that we have that 23% fib level, which is currently sitting at 1770. So gold is still trading within this fib zone, just below midway really, but we have plenty of support towards the downside. We have that 50-day EMA and we have that 23% fib level. Another really attractive site that I saw for the gold markets, and I really did think that we were going to take off, is that you could just draw this downtrend that we've been trading in for some times. We did get that breakout, especially when we got that daily close, and I personally did think that was going to be what really sent gold back towards that 1900 level. But we have stepped back below it. Whether it's temporary or not, we will soon find out. So that's what I'm looking for in the gold market, is to see whether that 50-day EMA can hold the gold markets as we go in towards the end of the week. In terms of data, we are quite quiet this week, but next week's going to be a very big week as we have non-farm payrolls, etc. So there's going to be a lot of potential catalyst that could move the gold market. So I will be keeping my eye out going into next week, but going into Friday, I'm just going to look to see whether the 50-day and the 23% fib level can hold the gold markets, and whether we can get that bounce which sends us up towards that B zone of this ABC correction up at 1830. Moving on over to the Nasdaq100, and we had a significant development here in the Nasdaq100. We have had some earnings come out, and also we had Tesla, which hit a $1 trillion market cap, which is fantastic. That is fantastic. That's great news. We had Hertz, the company that have ordered 100,000 vehicles from Tesla, and we saw Tesla stock pop over 10% on the day. And yesterday it extended its rally all the way to $1,100 a share, which is this incredible story continues to grow here for the likes of Tesla. And more importantly, my Nasdaq100 trade hit its take profit. So for those who are new to my channel, I bought the Nasdaq100. I cherry picked the bottom of this uptrend that we've been trading. We've been trading within for the past 12 months. You could argue since the 21st of September 2020, so just over 12 months. So I cherry picked the bottom here, and I sent a buy position. That's what this white line is here, and I was risking. If I just get that. I was risking a total of 4.35% towards the downside, where I had my stop loss just below the 200-day EMA, and I was targeting a 8.92% movement towards the upside, where I was targeting the previous all-time highs here for the Nasdaq 100, and yesterday we did go and achieve that. So that trade is now closed. I'm going to get rid of this table. Fantastic profit for myself there. Well done to all of my YouTube viewers who managed to capitalize on that trade as well. Big question though is, where does the Nasdaq 100 go next? Personally, I'm not going to buy it at these high levels. I think it doesn't really offer that good of that great of value. And I think I mentioned it on Sunday that a lot of these big FANG names, the likes of Facebook, Netflix, Google, Apple, they've all got to still report earnings in the coming week or so. And typically what tends to happen is that the expectations are incredibly high going into the earnings. So once the numbers do come out, you do sometimes see a pullback. And the likes of Apple, for example, which is by far the largest stock in this index, if it was to decline 5 to 10% within the Nasdaq 100, would pull back rather significantly on the following day. So what I'm looking for is to see whether we do get any negative reactions to the earnings numbers, but I'm also looking to see whether these companies have beat on their earnings. And that's what traders, that's an area where traders can get very confused, is that they may go into an earnings with a company like Apple, for example, and Apple might smash the numbers. They must they beat revenue, they beat the EPS, and still the stock the next day is down 5%. And that's just because the expectations going into the earnings were very high. There might have already been that that large build-up going into the earnings, but that doesn't really mean it's negative medium to a longer term. In fact, it's very bullish. And what tends to happen is that these companies, they follow their earnings. So if they report good earnings, well then 3 to 6 months down the line, you should see these stocks do very well. So just to sum it up, the Nasdaq 100, I'm looking to see if we can create some value. Maybe I move down towards a 50-day EMA, which is currently around that 15,200 area. That's an area where I would be really interested in buying the Nasdaq 100. But very happy with that profit that I've made. That 9% I captured there on the Nasdaq 100, where I cherry-picked the bottom of this market. And once again, well done to everyone who managed to capitalize on that trade. Moving over to the S&P 500. S&P 500 continues to create brand new all-time highs here for this index, and it's just done so well. Again, I bought at the 50-day EMA where we broke out and we got that daily close above it. I targeted towards the all-time highs up at 4,500, and we've just sliced through that. And it looks to me that we are very likely to go and hit 4,600, which will be the top side of this green box. Again, though, we have the likes of Apple, for example, which is the largest stock in this index. If it reports earnings, which it is going to do so in a few days' time, and the expectations are incredibly high, which they are. And if we see a 5 to 10% pullback on that stock the following day, well, then the S&P 500 should have some sort of pullback. And it's not necessarily a medium to longer term negative thing. It's more of a short term opportunity. So that's what I'm going to look for, is to see whether we do have any short-term pullbacks here in the S&P 500, perhaps to that 50-day EMA down at 4,400, and that is an area where I would be very happy to buy this index. One thing that I would highlight is that the RSI is approaching that overbought territory. I think we are trading currently at 68 on the RSI, so we are approaching that overbought territory, and hence that's why I'm looking for a pullback, which will then create and offer value. Moving over to the crude oil markets. Crude oil markets are starting to roll over here. As you can see, during today's trading session, we are trading in the red ever so slightly, down at $83.34. Not quite attractive enough yet for me to go ahead and buy the crude oil markets. As you can see, we've had a very large run up here over the past couple of weeks, and I'm looking for that further pullback where I can take full advantage of the crude oil markets. I think personally we're going to go to $90 and then $100 a barrel, along with many other big analysts on Wall Street. RSI is currently at 67, so we are very close to being overbought here. And it's very hard during times like this when you see the markets just going up and up and up, months on months, and you think, well, this market's so bullish and it never pulls back. Well, unfortunately, that's not the case. Even the most bullish markets do pull back, and in fact, it's healthy to have a pullback. in a bull market, as because it offers value, it offers an opportunity for more traders to get involved, and it gives it that further push towards the upside. And that's exactly what I'm waiting for here in the crude oil markets. I'm waiting for that pullback, which I can take advantage of. I know many of my viewers may think I'm crazy saying this, but perhaps a move down towards $76. So that's roughly a $7 pullback from where we are now. And I know that this is a very bullish market, but markets do pull back. That is the reality. And sometimes when they do, it's like a glass of cold water getting thrown over investors' faces. Markets do pull back. They don't just go up and up and up, because if they did, we would all be rich. So that's what I'm waiting for here in the crude oil markets, a pullback towards that 50-day EMA. And once we get that contact with that 50-day EMA, I will open a rather large position here in the crude oil markets. Last but not least, we have the euro US dollar. We haven't really done much this week. 1.16 is where we're currently trading. I am bullish here. I still have a buy position open where I'm targeting that 50-day EMA up at 1.17. We've been trading rather flat, to be honest with you, for the euro US dollar over the past couple of days. Nothing's really gone on here. RSI is pretty much mid-range around 45. So I'm looking for that jump towards that 1.17 area. If we can break above that 50-day EMA, then I think we go straight towards a 200-day EMA up at 1.18. But on the flip side, if we do roll over and we break below these swing lows that you can see on the screen, which is currently at 1.15311, then I think we go straight down towards 1.15. It's as simple as that. But medium to long term, I am incredibly bullish here for the euro US dollar. I'm going to wrap it up there for today's video, guys. Of course, on Friday, I will post a brand new video just concluding this week's market movements. But if you do wish to copy my trades, I share all of my trades on my WhatsApp chat. And you can join that chat for a very small fee of £249 for a year's membership. If you head over to my website, dailymarketmovements.com, I've left the link in the description of this video. Everything that I've mentioned in this video is not financial advice. I'm just sharing my own trades and sharing my own opinions with you guys. But if you like what you see and what you hear and you want some more of me, then head over to my website and you can join my group and copy my trades more in depth. But thank you very much. If you haven't yet done so, then please give my channel a subscribe and give this video a likes up. And I will see you guys on Friday.